What's going on, guys? Welcome back to the channel. The 22nd of September, Sunday, early morning on the East Coast. We're going to look at Aerodrome finance here in this video. We'll drop over to Bitcoin. We should also have a turbo video out after this one. Coinbase will be the price data provider here on this chart. This will be a daily chart. Let's take a look. What's going on? Pretty quiet overall after our big move last week. I'll take a zoom in here, get rid of that watch list there. So I see in the comments real quick, and we'll jump into the chart here. Why don't you own Turbo? It's a great investment, so on and so forth. Look, I could own Turbo. I could own XRP. I owned XRP for years, many years. I used to own it back in 2017, and then the past couple years, I stick to what I enjoy to trade, which is individual stocks, many of them, and the micro futures markets. There's hundreds, there's thousands of cryptos out there, stocks, there's tons of futures products. I just can't trade everything. I don't have the time, I don't have the capital. So for me, I stick to what I enjoy. I enjoy trading the micro futures. I do dabble in crypto from time to time when there's extreme opportunity, usually when a market, when we have a crazy market crash, which does not happen often. I will try to get in pretty heavy to the long side. I trade the micro futures, one, because they're liquid and you get the benefit from the use of leverage. Leverage is a double-edged sword, but when you have a strategy that works and has worked and proves itself for a very small amount of capital, you can do quite well. That's why I don't own everything. And one of those being Aerodrome. I don't own Aerodrome, Could I have bought the breakout here? Of course I could. I talked about it on the channel here. This is a big breakout. We're looking for a break above this trend line, and we, finally got it. Could this breakout here on the 12th of September been a failed breakout? Well, it actually was on the 12th, and the 13th he got confirmation. So if I was looking to trade this breakout here just based on this trend line, I would have to have a protective stop in place. So for example, if I bought this on the 12th at a break above the trend line, which let's call that like 61.8, and it ran all the way up to a high of 67.5. Let's say it didn't break out the next day and say it tumbled lower. So for example, over here on this day, the 18th of July, you had a breakout above the trend line. The next day you closed lower, and then you continued to tumble, and then you got the real tumble on the down 12% on the 22nd. So again, going back to here, if I would have bought this on the breakout, right, basically, so this closed at 61,185, call the breakout, what did I say, like 61.8? Basically would have been break even, slightly down on the day. The next day, obviously you would have benefited. It was up 15%, and it's never looked back since. But that's not always the case, as we see over here, where you had the breakout on the 18th, and then you were down on the 19th, which is fine, no big deal, but you have to have a protective stop in place because this thing went all the way to a low of 91, and let's say you bought it at 98. So that's a pretty large percentage move there. So let's call that right there. And let's say the low here. So basically, call it 8, 9, 10, depending on where you got in percent move to the downside from where you would have in theory entered. You have to, the way I look at the markets is, the way I trade the markets is, whether you're going short or you're buying a breakout to the upside, it might not work. Okay. And that's fine. But it might work the next time, so you have to take all the trades. So, if you're taking all the trades and you have hundreds, if not thousands of products, you need a lot of capital to be able to allocate, X percentage to each position. So anyways, yeah, I could have traded this. I could have bought the breakout, but I personally need to have some kind of mental protective stop in here. If your broker, doesn't allow you to put a stop in, and so on. So anyways, before I get way too far off the track here, yeah, I like to trade crypto when there's extreme opportunity. Extreme opportunity, like when you go back to 2019, I believe it was, when you had Bitcoin down to like 3,800. Markets were crashing, Ethereum super cheap, stuff like that. And, we might not see a crash like that again for a long time. But anyways, that was quite the ramble there. Okay, what do we got going on here? So we have our top that came in just shy of the 88,507 target number 2 we had. We didn't spend much time at the 77,319. What was that? 77,319 level. Did spend a little bit of time there on the smaller time frame, but overall the daily basically blew right past that. Tested it on the 19th, and then things have been quiet after we saw the top come in on the I believe that was Friday, Thursday, the 19th. So I expected, as I talked about in definitely yesterday's video, that once we got close to that 88,507 and printed a lower high the next day, I expected a sideways to down market, and we're getting it's exactly what we're playing here. We're playing the slightly down to sideways market here. We got 3 levels basically crunched right together: 85.2, 84.7, 84.4. These levels right here are acting as resistance. If you go to the 3-minute time frame, by the way, why do I go to the 3-minute time frame? Because I find that it works well when you're actively trading. Again, I go back to the micro futures. That's what I actively trade. And if I'm, in a position, a more short-term position, which could be anywhere from a couple hours to a day or two, I use the 3-minute time frame to really get to hone in on certain prices. So here you can see in the 3-minute time frame the resistance we're finding at these levels. Again, 85.2, 84.7, 84.4 right here, these 3 levels. And you could see a little bit here. Look how close. So this is where the smaller time frame, this example, the 3-minute, sometimes people use the 5-minute. Again, I use the 3. Works for me. You got to find what works for you guys. What works for me is trading the, lots of individual stocks in a Roth IRA, and trading the futures, the micro futures, because they're a lot smaller of a contract. They're a lot more forgiving. The barrier to entry is much smaller than the big boy contracts. Here is the initial move up to 88,507. I mean, you couldn't get closer to that level, and we spoke about that before the big breakout. The 88,091 is really where we, topped out, right under the 88,507, which was another level I've had in there for a while. Go back to the older videos and watch. It's been there for a while. Here is the 77,319 level, the initial move up. You can see we actually blew right by it. We came back. We whipsawed around basically 75.5 and 77.3 for a little bit, and then just continue to carry on the strength was pretty incredible there for a while. And now we're just basically hanging out between 79 and call it 85, right in these levels here. So that is that. Again, that's the 3-minute time frame. And, most people in the markets shouldn't be actively trading in and out of stocks and stuff like that. It takes a lot of time. It takes, discipline to sit with positions. It takes following your rules. It's not for most people. It takes a certain person You have to have certain expectations, etc. A lot of people do it. A lot of people aren't successful. The buy and hold strategy, you pick an index fund, for example, if you were buying and holding Bitcoin, dollar cost averaging in over the long term, that's probably the best strategy for most people, not trying to pick individual cryptocurrencies. There is so many smaller cap coins, Aerodrome for example, XRP. For you to just pick one coin, Dogecoin, Turbo, whatever it is, and, say, hey, this is going to be the big winner, your odds are pretty low. You have to be so involved in that coin, following it, and really understand how it trades for you to be, essentially successful at it. But, of course, people do it and it can work, but you're better off. Most people are better off, I should say, probably just dollar cost averaging into Bitcoin over a very long period of time. For example, like I said, back in, I believe it was 2019, 2018, when Bitcoin hit 3,800 on the low, Bitcoin right now is at 62,000. So you would have done pretty well just continuing to buy that over the long term and forgetting about all the pumping up meme coins. I cover Aerodrome Finance because there's a decent amount of viewers on the channel that enjoy watching someone else's opinion, and that's why I cover it. Period. That's why I cover Turbo and so on. Getting back to what's going on here, we're testing this upper range here. Essentially we could pull back all the way to the 79.7 level. Of course, there should be good support down here at 72.3. Do I think we're going to move that far? Unless Bitcoin gets hit really hard? No, I do not. I think that more likely stopping right in this 79.7 area is more likely. As far as another upside breakout, of course, I don't know when that will happen, but you want to keep your eyes on the high of the 19th of September. You want to keep your eyes on 88.507, 88.091 as well. That's where the market has topped out recently. Above that, if and when it does start to break out, who knows if it will, guys. The 98.224 is next, and then this big this last major top here on the 18th came in at 104.82, 106.42. So we'll see. I mean, this thing has gone on a very large run, a slight consolidation to a pullback. Very normal action. Very normal action. Keep in mind that from the breakout here to where we're currently trading, call it 35% move in probably a week and a half, 43% move to the top of that candle wick. We'll see. I think I saw somewhere in the comments, $12 to $25. Understand that that's a crazy move. Of course, it's possible. I don't think it's possible unless Bitcoin is really, really rallying. Again, that's a very large move. Possible, of course, in the right market condition. I don't think Aerodrome's just going to take off like that. But so far, so good. We're holding well. I don't see anything bearish at the moment. That can change quick, though. That can change real quick. But the key was this great entry here. Again, we had the shakeout on the 12th and then the follow-up on the 13th. So the difficult part about buying breakouts is, let's talk about this real quick because it's important if you're more of an active trader in the markets. So let's go back here. You bought this breakout right here. Breakout referring to above the resistance trend line. You bought this breakout on the 18th, right? It failed. It closed below the trend line. Okay, that's fine. You still hold your position. Where do you close your position? Are you holding your position all the way down to when this market goes to a low of 46 and you bought right here at $1, that's a huge, that's a 40 some percent loss, guys. So when you're buying breakouts, you have to cut your losses quickly. If the market breaks out again, you better get back in because you could miss something like this when it actually goes up 40 some percent. So if you cut your losses small, let's say you bought this breakout here on the 18th, it didn't work out, you cut your losses small. Here again, it tried to break out on the 26th, it tried to break out on the 27th. Again, over here, guys, tried to break out on the 26th of August. That's 1, 2, 3, maybe 4 or 5 times that it didn't continue to, go as you expected, which would be higher if you're buying above that trend line. So you've got to cut your losses quickly, because obviously you could see, 40 some percent move to the downside. But here's another breakout. Call this the 5th or 6th time it broke out. And then boom, you got the 15% day. And then, you're up 40 some percent. So that's the active trader. That's the tough part about it is if you're not willing to buy all the breakouts and then cut your losses immediately if it doesn't work out, and then quickly turn around potentially the next day or so and get back in with no emotions, the buy and hold strategy is just way better for most people. There's a million ways in the markets to make money. Okay? There's a million ways to skin a cat, as they say. The way I look at the markets, some people, may or may not agree to. It's not going to work for everybody. It works for me. And again, trading the smaller futures contracts and a bunch of individual stocks works for me. This channel is called Micro Futures Trader for a reason. I started this channel a couple years ago thinking, okay, I'll just cover the futures markets, etc. And then somewhere along the line, I don't recall, I covered some crypto, and that just seemed to do way better. So I don't even really bother talking about the futures anymore. I just cover the cryptos because that's what people are interested in seeing. Guys, things are quiet right now. Keep your eyes on the 88,091, the 88,507 if we continue higher here. Otherwise, I expect, as I said a few days ago, sideways to lower price action as the high came in just shy of our 88,507 target. Of course, not financial advice. You guys have a great day.